Inflation. It's a word that keeps coming up as we look at the state of the economy. And with new variations to describe its persistence, we'll get a look at how sticky U.S. inflation was in September after jumping by the most in more than a year in August. On Thursday, the Consumer Price Index is forecast to show a 0.3% rise from August, when it rose 0.6%. The annual reading is expected to increase by 3.6% compared to a 3.7% rise the previous month. Core inflation, which strips out food and energy, is forecast to remain about the same. That bolsters the case for the Fed to leave rates unchanged for the rest of the year. It's unlikely inflation will fall to the Fed's 2% target anytime soon. Some say that could take until the second half of 2025 to happen. Yet it could show that higher interest rates are starting to weigh on consumer prices. Whether that will continue to the end of the year as the holiday season begins remains to be seen. The lull in earnings will start to pick up by the end of the week, with big U.S. banks reporting on Friday. Wells Fargo, JPMorgan, and Citigroup all report Q3 results. Wells Fargo's resilient net interest income could boost revenue revisions this year, which means higher earnings per share. The bank also announced last week that it plans to spend $175 million to expand its retail banking presence in and around Chicago. JPMorgan could also see better than expected results after Q2 implied better revenue this year. Its market leadership could help drive profitability and long-term growth. Expansion in Europe for retail growth beyond the U.S. with acquisitions and smaller deals is something to watch out for. Banking fees could continue to be a drag for Citigroup, along with higher costs from investment spending. Earnings per share and revenue are expected to be lower from a year ago. The bank's decision to exit some markets and focus on others should boost structural returns. That's Advisor Lookahead for this week. For more news and information, check out globeadvisor.ca.